Okay, ladies and gentlemen, into the final step of this problem on the Right Stuff Inc. You can see I have moved my T accounts, also called my ledger, over to the left. I have space for a trial balance on the right, and that's what we're going to learn to do. We're going to prepare a trial balance in this video. So a trial balance just lists all of our accounts, and it lists them in what we call balance sheet order. So it lists them assets, then liabilities, then shareholders' equity, then revenues, then expenses. Assets, liabilities, shareholders' equity, revenues, then expenses come last. So let's get going and let's start listing our assets. And now when we list our assets, we need to list them in a specific order. We list them in balance sheet order. So we list them assets first, and within those assets, the most current asset comes first. Same with liabilities. The most current liabilities come first. Then our longer term liabilities. So let's go for it. There's the title, name of the company, trial balance, and then the date. We put two headings here, one for debits and one for credits, and then we just start listing accounts. So when I look at my assets, those are what come first. I got to list them in order. Cash will be first. It's the most current. I would say accounts receivable will come second before supplies. Equipment is last. It's the most long-term of the four. So let's do it. Cash, AR, supplies, equipment. So cash, 950. Oh, AR is 0. We actually didn't technically have to list it. Since it's there, I'm going to put it down. Supplies, 200, and equipment, 4,000. The reason we don't have to list accounts receivable, it's like, if your company doesn't have any yachts, you don't need to put yachts, 0. The assumption is if it's 0, you don't list it. So probably a bad move on my part to list it. Really not the end of the world. Our company will have accounts receivable. It'll go up and down during the year, so it's fine. Next, liabilities in order. Accounts payable, then bank loan. Accounts payable is much more current than a bank loan. AP is 400 credit. Bank loan, payable is 5,000. Okay, I'm going to scroll down a little bit. I see I'm getting dangerously close to my little picture in the corner. Common shares and dividends. We'll go dividends first. 500 debit. Common shares, 1,000 credit. Next, revenues, and last, expenses. Oops, don't say revenues. It's taxidermy revenue. Taxidermy revenue is 1,250. Our expenses are rent expense, salaries expense. Rent was 600. Salaries were 1,000. Utilities expense, 200, and telephone expense, 200. Okay, so this is called trial balance for a reason. Trial, as in we're trying something out. Balance, we're trying something out to see if it does balance. So let's see if this balances. Let's see if our debits do equal our credits. We're going to put ourselves to the test here. Call up the calculator. Oops, where is it? Where's my mouse? That's the trick of this whole thing, is finding your mouse sometimes. 950 plus 0 plus 200 plus 4,000 plus 500 plus 600 plus 1,000 plus 200 plus 200. I get 7,650 in debits. When I add up my credits, I get 400 plus 5,000 plus 1,000 plus 1,250. I get 7,650 in credits. My trial balance does balance. Now, I want to caution you, that doesn't mean we did everything right. That doesn't mean we got our journal entries right. I double underline the bottom, though. I $sign at the top of each column. I call this totals. Your prof may not call it anything. It's very common just to have like the totals there, and it's pretty self-evident that's what they are, totals, but I like explaining things even when it's not necessary to explain them. So those are our total $76.50 and $76.50. Got to put dollar signs beside them. So again, it's very possible that you could have your trial balance and still have screwed something up in a journal entry or been mistransferred something to the wrong T account, but this is a very good sign. If your trial balance doesn't balance, you can be sure you messed up somewhere. Okay, a couple of things I look for just as I'm scanning my trial balance to see if this passes this sniff test, to see if I haven't screwed something up. I would expect all of my assets to be debits. So I'm looking for a big chunk of debits at the top, and I have it. I'd expect all liabilities to be credits. There they are. Revenue should be credit, and expenses should all be debits, and they all are. And if they're not, I kind of think, did I do something weird, or did something weird happen with this company? Because if I've got like a liability that's sitting in a debit balance, something weird happened or I screwed up. So that's a nice place for you to double check whether, even if it balances, maybe you've messed something up. The other thing I would say is once you've prepared a trial balance, financial statements are easy because here we've got our assets, our liabilities, our shareholders' equity, our revenues, and our expenses. Well, if I look at revenues and expenses, revenues minus expenses equals net income. I can see this company lost money because revenues are $12.50 and expenses are higher than that. But I could prepare an income statement pretty easily, right? Like not too complicated. I could prepare a balance sheet pretty easily because I have the assets, liabilities, and equity accounts listed up there. So this feeds into financial statements really, really nicely. All right, we've learned how to do journal entries, T accounts, and to prepare a trial balance. Stay tuned for the next video.